The Opportunities Fund is a core diversified fund. It is a blend of a top-down as well as a bottom-up approach. The fund has the ability to take aggressive sector-level positions. This is based both on our view of medium-term growth prospects as well as valuation. When we start to look at how we go about choosing individual companies for the portfolio, we are guided more by the fundamental characteristics of the company. It is our research tells us that there are companies which have significant competitive advantages, and this enables them to report healthy capital return ratios, consistent cash flows and industry leading growth rates over extended periods of times. These outliers, because of these metrics, often tend to pay at a price which you have to pay up significantly for, but as long as we think that these companies have sustainable advantages, we are quite comfortable emphasizing these fundamental characteristics instead of just looking at relative valuations. The fund also picks companies where we believe there is a scope for a upward movement in return on capital or a improvement in underlying cash flow metrics. These could be companies that operate in industries which are by nature more cyclical. Alternatively, it could also be a situation where the company is experiencing challenges due to past strategic or execution decisions it has taken. Again, if our research tells us that these companies could see an improvement going ahead and it is fundamentally a sound business, then these are again companies that we would consider investing in. In these companies, there is an upside not just from the improvement in the business fundamentals, but equally if you are able to get in at attractive valuations, there is an upside from valuation re-rating as well. The fund also has the ability to operate across the market cap spectrum. So while at the core we have a significant allocation to large caps, based on the opportunities that we see in the marketplace, the exposure to mid-cap stocks could vary based on where we see the valuation differentials. If you look at where the Opportunities Fund is currently positioned, our most significant overweight position is in the automobile space. This is driven essentially by the fact that we believe this is a sector which has long-term structural tailwinds, and also in terms of valuations is reasonably attractively placed. The other sector where we have a overweight position significantly is in the information technology space. Over here, our comfort is primarily guided by valuations. We do recognize some of the headwinds that the industry is currently experiencing in terms of growth, but at these underlying valuations, which are the only sectors cheaper than this in the market are global cyclicals, we actually believe this is a good time to be hunting for value in this area. The banking and financial sector is a very large exposure for the fund, but here our exposure again is guided by the two principles I talked about earlier. We have a set of companies which we think are very well placed in terms of going for growth, and we think there are some other companies we own in the portfolio where they are experiencing currently challenges due to past decisions, but we do believe that the cycle is likely to turn more favorably for them over the next few years. The two large underweight positions in the fund, consumer staples, where we do not find the trade-off between valuations and growth to be very attractive, and the other area where we have an underweight position is the metal space, where we have challenges related to the fact that we are not very positive on the global cycle, and valuations as well do not lend much comfort at this point of time.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.